Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer, and here on this channel usually I spend most of my time analyzing individual stocks, and my mission is really to teach individual investors how to invest well in individual stocks. I mean, that's the primary mission, and there are different strategies for doing that. But I really think that over time, the strategies that I'm using will work out. Now, I first started this channel back in early 2021, and for about 3 months, I put out videos where I analyzed different stocks. And the method that I used was I would usually have one stock that I thought was worth buying and that I actually bought myself. And then I would have another stock that I thought was a good business but was overvalued, and so investors should think about selling it if they owned it. And then a third stock, which I thought was in a void. Either there's not enough data, we don't know enough about the business, or I saw something I didn't like in the numbers, but we can't really predict when that would necessarily manifest itself, but the risk was there, so it should be avoided for that reason. I tried to, when I could, have those three ideas, those three different types of stocks be somewhat related to each other when I put the videos out. And at the end of this quarter, I'll review kind of all of those ideas again. Back in October, when I relaunched the channel, I reviewed some of those. So I released a video not too long ago where I talked about aiming at the medium term, really, of that kind of 3 to 5 years in the future, which is really kind of the sweet spot, I think, where earnings start to actually be reflected more in the stock price. Early on, earnings can be really separated from the stock price over short periods of time. But if you go out 10 years, then earnings are almost always very correlated to the stock price, along with maybe debt and a few other factors. So the trick is, though, that it can be harder to predict earnings once you get really far into the future to some degree. So while the earnings more closely reflect the price, or the price more closely reflects the earnings farther in the future, it's harder to predict earnings 20 years into the future. So that 5-year mark is pretty good. And the stocks that I'm going to look at today, I made videos of almost exactly 3 years ago, on January 31st, 2021. One of the reasons I put a bunch of videos out in 2021 and then just kind of sat around for a couple years, other than me just being busy, is that I know it takes time for my valuation process to work out. And so I wanted to kind of establish a little bit of a record with people so we could go back and look at it, because I really do actually care about the results of my strategies since I use them myself. So today we're going to look and we're going to compare Meta, which used to be Facebook. If you go back at my videos, you can watch the video there. Compared to Apple, compared to Tesla. These were all mega cap tech stocks that, granted, they do different things, but they all sort of fell in that mega cap tech category in early 2021. And I thought that there was a significant difference between Meta's potential future performance and Apple's and Tesla's, based on their valuations and data that we had available at the time. So on the fast graph here, that would have been right about there for all of these, right at the very end of January 2021. Now, at the time, I did not realize this boom bust was going to happen. I started to realize it right about here. And I partly realized it because I owned Meta stock at the time and I could see what was happening. And then I realized that the stimulus money pattern that we saw was temporary. It was going to change, and that earnings for a lot of companies would fall like Meta's ultimately did this year. Now, when I bought Meta, I decided, because I didn't have hardly any growth or tech companies back in 2021, much more growth at a reasonable price and value oriented businesses is what I'd been buying. Meta was maybe one of the first. I mean, I owned Apple for many, many years before this, but I sold it in 2020. So, and I started my service in 2019. So Apple wasn't a part of that. So I think Meta was one of the first big tech companies, like the really big ones that I bought. And I didn't have any exposure there, so I just committed to holding it for the long term. So even though I saw this drop coming, I didn't know it was going to drop that deep, but even though I knew that was going to come down, and I wrote about it when it came to Google and when it came to Apple, I kind of warned investors about potentially they could do the same thing that Meta was probably going to do. But I committed to holding it, so I actually still hold it. I held it ever since then. And then I thought I did sell Apple in 2020 pre-pandemic. And I thought it remained overvalued. I do think let's just look at Apple now too. I do think, let's see, so that was early 2021 when I was talking here. It was pretty overvalued. I wouldn't have expected them to earn quite this much off of the pandemic. And then what I didn't expect was for them to be able to quite maintain this as well as they have been able to maintain it. They haven't grown at all since then, earnings wise, not since mid 2021 basically. I mean, especially if inflation is taken into account. But they have maintained that business. So they were able to probably pull people into their ecosystem, sell people more products within their ecosystem, and they've been able to kind of hang on to that. I don't know if they're going to be able to do it, but you have to give them credit for not experiencing that type of earnings decline. Now, granted, they buy back a lot of shares, so if you take those out, this year was definitely going to be -2. So it's not that they haven't experienced a decline. I think iPhone sales are flat to low. Revenue for them is flat to low. But they haven't had like a bust, really, is what I would say. So that's good for them. And then Tesla, I made a couple videos on them. One was this one, was the one that I talked about, which is right in here. And this one was about valuation, which I thought was just impossible for them to actually achieve. And then more recently, I've made videos about the cyclicality of their business, which is totally playing out. They're going through a down cycle. This is probably going to be worse, earnings-wise. And so both of those theses were correct. But this one back here was a valuation call. I just didn't think there was any way they were going to be able to make as much money as investors were pricing in. And even now, the stock trades at a 60 PE with falling earnings. So it's still hopes and dreams, I think, for Tesla. But what I want to do is look 3 years later. We're getting into the area now and we haven't had a recession yet. Okay, so really there's a test that's coming that's going to test these businesses even more. In some ways, I think Apple will probably fare the best during a recession because usually the people that use Apple have a little bit more money. They can afford to pay for a little bit more things, or a little bit less affected by recession. Advertising, on the other hand, is very affected, and cars are very affected as well. So Meta might not be the best one, and we got a taste of it with that earnings drawdown we saw after the pandemic bust. Wrong chart here. Let's see. Let's find the right one. Here we go. Okay, so this is just a little. I set up these for individual. For all the buy ideas that I published in 2021 or made videos of. I have a spreadsheet. I have one for the sells and I have one for the avoids. And I just put this up so I could glance and see how they were doing. So I made another one just so I could put all three of these together that came out on the same day. So you could see kind of how they're doing. Now, granted, Meta just had like a big bump today, so that will probably draw back a little bit. I don't know if they'll be able to actually maintain where they're at today. And they also had that big drawdown that I showed you about. But over time, earnings will prevail. So they were able to cut a lot of costs. And Google did the same thing. I expected Google to fall farther, but they were able to cut enough. And we avoided a recession long enough that they were able to come back as well. So pretty much everything that can be said about Meta can also be said about Alphabet. And so, yeah, Meta's up about 85% since that video came out. Apple's up 43% with dividends, and then Tesla's down 30% since then. The S&P 500 is up about 40%. So you can see really Apple hasn't done really any better than the S&P 500 has, whereas Meta has produced double the returns of the S&P 500. And Tesla has drastically underperformed the S&P 500, and I expect it to probably continue to do so. So, in this little three, and I'll do a video where I go over like all the returns, but the point that I really want to start driving home here is it takes time for these theses to play out. Really, let's say we have a recession sometime in the next 2 years. You want to see how they manage through that recession and then give it a couple years to come out of it. And so then you have, let's say, 3 or 4 years before a recession, a year of a recession, 2 years coming out. You put that all together, you have a full cycle at that point. And then you can go and really see where the businesses stand and where the stocks stand at that point. And at that point, that's when the ultimate winners will have shaken out. And I expect that what we're seeing right now is once we come out of whatever the next recession is, Meta will probably have performed significantly better than Apple and Tesla from this particular starting point. Now, and as I said before, Apple will probably perform better during a recession than Meta. It depends on how far Meta stock runs up and how much they earn before the recession. But we saw that they're pretty economically sensitive when it comes to like advertising, which is totally expected. So you're going to get more volatility with Meta, but if you bought it, and you definitely have gotten more volatility, maybe not more than Tesla, but I think Tesla drew down about the same as Meta. But again, you see the difference. Meta came back. Tesla is not as at its low, but it hasn't really recovered. That's when the quality of the business, the cyclicality of the business, the price you paid for the business works its way through as the years go by. And you can do that roughly on average by understanding what the earnings did in history, what they're likely to do in the future. I mean, that's really what you're trying to do when you invest. Okay, I just thought I'd make a little video where I kind of try to drive this point home with this particular example, since Meta did really well this quarter and the stock is up, and show that earnings do predict future stock prices, even if it can be choppy along the way. If you found this useful and you're new and you're just watching this for the first time, go check out some of my videos. Maybe you look at the old Meta, Apple, and Tesla videos and see what I had to say there. And hit the subscribe button, and I usually do individual stock analyses and from the S&P 500, and I'll see everybody later.